folks, Dan Frio here, the rate update. Today is February 12th, 2010. No, it's 2022. Guys, I know I keep messing up. I apologize. So let's get on to what's going on in the markets and why. Okay, so we're going to start off by, I got some new technology here. So as you know, if I mess up a few times, please bear with me. I'm trying to use all this new technology to stay up with the times. But let's get into what I want to talk about right now is basically let's bring a market update. So let's get into what's going on in the markets right now. So you can see here's where the MBSs went for Friday. They were up 55, but for the week, here's where we were. We started way up here and we ended where we got way down here, but we came up to here. Okay, so what is this? So let me explain it to you. What this is the MBS chart. It's a bond that trades on Wall Street that is the biggest component, or it's the major focal point or investment or whatever you want to say in regards to your mortgage rate. Okay, so let me go to another screen here to show you guys some correlations. And some people might say, hey, Dan, you should focus in on the 10-year Treasury and all this other stuff. No, guys. Okay, so let me explain to you some things. We don't watch the Treasury bonds because they don't necessarily have to correlate with what's going on with mortgage rates. So here's the MBS market and where we've gone. But I just want to show you this, and then I'm going to get to the down payment assistance, and then we're also going to talk about our extended lock program, because we have a lot of people building houses that are basically freaking out. They're calling. Friday was crazy. So let's get on to this. This is what's going on in the MBS market, okay? Why we follow the MBS market is because it gives me the focal point of exactly what's going on with mortgage rates. So here's the miscorrelation. I know there's a lot of lines here, but this line here, right here, is a Treasury bill, okay? It's the 2-year Treasury, okay? We don't follow this because look at the correlation between this and mortgage rates. So we go up to here, and the mortgage rates are right here. All right. So that's why, we don't really focus on that. The MBS market has more of a correlation with what's going on with mortgage rates. So you see here, as the MBS market is dropping, mortgage rates are going up. So I just want to explain a little bit on basically on that, what's going on there. The biggest news I want to talk about is the inflation front. And I think I kind of hit a hornet's nest yesterday because I had a lot of ticked off people at me saying, hey, Dan, maybe it doesn't affect you because you're this rich guy, but it's affecting all of us. Guys, I'm a dad, I'm a husband, I have a car, I drive to work, I have a mortgage payment, I buy food, I travel. So I get it. What I'm trying to say is the mainstream media, they basically throw nuclear waste on stuff just to get you guys to view. So I know that prices are out of hand in a lot of areas. But what I want you to know is, or find out why. What's the facts? Like, for example, the clickbait on YouTube. I see every day, housing market is blowing up. The world's going to end and all this stuff. And people are clicking by the hundreds of thousands. But then when you look at the content, it's like, they really didn't tell me anything I didn't know. And they really didn't have any solutions for me. What do we do? So that's what I try to do here on the channel, is to explain to you guys, why it's going on, how it's affecting you, how it could affect you, and what you should do. But so just to clear the air here, let's go on to see the inflation numbers, okay? And I got a couple monitors going on, so if I'm looking away and so forth, that's the reason for it. So let's go back to my picture-in-picture, and you're going to see I just posted this newsletter here. Just go to any of my social media, go to my website, go all the way to the bottom, scroll to the left. There's all my social media platforms. I post every day some kind of newsletter, something giving you valid information in regards to mortgages, housing, and what's going on. Okay, so let's get into some of the details in the report. The median forecast for the economy was the CPI. That's the core inflation number. Now, what is the core inflation number? Let's get that clear first. The core inflation number is all of the increases or decreases in values of stuff. But what the core piece is it strips out, or it pulls out, energy and food. Well, think of your life. What do you use the most? Energy and food. You drive to work. You drive to the grocery store to pick up your food. people, they use trucks to get the food to their locations and so forth. So they extract that data out. Why do they do that? Because it's really volatile. It goes up and down really fast. So that I want to make sure you guys have a key point there. Okay. So that's what we want to talk about. The core components, right? It rose from 5.5 to 5.9 in January. Okay, traders felt that number was a little too hot. Okay, they said anything as soon as it hit 6, well, the world's going to end. Well, we hit 6. We hit 6 on the button. So basically, they're like 5.9. We weren't really concerned, but when we hit 6, it was crazy. That's what I'm trying to get to you guys. Okay, CPI did not come in at 5.9. It actually came in at 6. The highest in decades. Then we go, is worth noting, part of the motivation came from Senator St. Louis Fed president. So the Federal Reserve consists of a main guy and then a group of other people. Okay, there's one guy out there, James Bollinger. He's saying, the Fed's going to raise rates next month and they're going to raise it by 0.5%, or he's proposing that they raise it by 0.5%. Why is that important? That 0.5% usually has a trickle down effect through the economy. But just so you guys know, the Federal Reserve does not control. They don't say, okay, here's what mortgage rates are today. That is done by the mortgage-backed securities market. The Federal Reserve has a role in that, but that they've been buying the mortgage-backed securities, buying those up, thus driving down rates or trying to keep mortgage rates stable. He's been saying that they should take an aggressive approach and jack that up 50 basis points. The expectations is for 0.25. So he's always saying that. And if you go back to a lot of his comments, you can go down through here, March of 2022. He's saying, well, if you go down through the section here, he said, Federal Reserve Bollinger expects 2 rate hikes next year. And that was November. So now he's going from 2 rate hikes to everything's out of control. Okay, so that's what I want you to understand there. And then you can go through, this is a really nice piece on the internet, Trade Economics. I'll put the URL down below at the video once this video ends, so you guys can dive in if you want on all the inflation numbers. Okay, so that being said, let's get to why you're here. Okay, so as I'm asking, as I'm going through things, please, I need participation here. I do this because I can post a video that just gives you data, but this is supposed to be interactive. I need you guys to ask questions so we can answer those. I can guarantee you it's like class. Some people are afraid to raise their hand because, oh, that's a stupid question. Once somebody raises their hand, then you're sitting back, thinking, oh man, I had that same question. Or, half the class had that question, but nobody wanted to really ask the question. So please post that on the Post-it, and so we can start going through any questions that you have. But what I want to talk about is down payment or lack of. All right, so let's get into that area right now. When it comes to you buying a house, all right, you need, I'll reference it as skin in the game. Okay, in most cases, you need some money as your down payment. All right, so there's areas that you don't need it. So when you're talking about VA or USDA, if you qualify for those, I would highly suggest we use those programs. I had a young gentleman call me the other day, and he's in Austin, and he's like, I want a conventional loan or USDA loan. First thing I'm thinking is Austin doesn't have USDA eligibilities. He's about 20 miles outside of Austin, and it works. It worked. So that person needs 0 down, no money down. Okay. VA is the same thing. So if you're a veteran, God bless you. Thank you for your services. You are entitled to this. This is one of those entitlements that you earned. So many entitlements are just, you're entitled because you're entitled. This was earned. So if you're a veteran, please look into those programs. One caveat there that I want to talk about, though, is if you're a veteran and you've used that program multiple times, watch, because there's a lot of fees charged by the VA. Not charged by me, not charged by the lender, but charged by the VA. Okay, and those numbers can be substantial. All right, so I want to go through the programs and then I'm going to start answering. So thank you guys for starting to post. Let's go down. I was doing research all week on this, and we have about 30 different programs for down payment assistance. There's national programs, there's state programs. You might even have a local program in your city. Those are the areas where I need you to really do your research. I will find the state and the federal ones that you qualify for. But let's go down through. I'm just going to give you the nitty gritty behind these, and then I'm going to give you the pros and the cons, because I want to give you all the information that you have to make a valid decision. So if you go over to, I'm trying to do this again. Let's see if it works. Okay. I know this is hard to see. If anybody out there knows how I can use StreamYard and zoom in on these numbers, I would highly, if you can email me on how you do that. Javier and a lot of other guys that do these videos that I follow, these people on YouTube, they are really good at this, and I'm learning. So, please give me a kudos for trying. When we go through this, most of them, you want to focus in on, the first thing is, what is the rate? Okay. And what is the cost? Like we do any other mortgage. What's the rate and the fees for this down payment assistance program? What I don't want you to do is get into a down assistance program that does this. It'll give you 3% of the loan amount. Okay. But then the lender or the broker, maybe us, whomever, some programs, we have to charge you a fee because that's how we make money. In most lenders, we'll do the same thing because this is a specific program, maybe through the government, some other entity. So we usually charge you 1 or 2 points for the loan. So let's just say, for example, you're getting 3% of a down payment assistance program with this grant. Okay. Then you're being charged 2% for for somebody to put that together. And then the grant company is going to charge you maybe $1,000 to get the grant. Okay. So you just basically ate up almost all your money. So what was the end result? You might have netted $1,000, $2,000, and your rate is a 1% higher than the market rate right now. Okay. So those are the things we're going to focus in on. So those are basically the cons in a lot of areas. Okay. Another thing you want to look at is that down payment assistance program. Is it a loan? Does it require payments? How long does it take to be forgivable? And, is it forgivable? So those are all the areas that we have to be specific. I can't just say, okay, this meets this and this meets that. What I need is your participation. You guys reaching out to us to say, here's what we got. What do we qualify for? Okay. So a lot of these programs, they will give you up to, and if you look over here, I know this is probably difficult to see, but you can get up to 6%. Is that worth it? I'll do all the numbers and the analytics behind it, and I'll present that to you guys to say, what do you think? I will give my true feedback. I might come back to you sometimes and say, I wouldn't do it. Why? I'm going to get my rate I could get is 3.99, or it's going to be 4.99, and I'm going to net $1,000. I don't need $1,000 that bad to pay that high of a rate for that long of duration. But if you go through here, it's 6%. Maybe that's a good deal. Okay, I don't know, and it's your unique situation that we're going to discuss about. The loan, is it a grant or is it a loan? Okay. How long is it forgivable? If you go up through here, it's some of these programs, and again, I apologize, you can't see some of these. You walk out of the closing and it's forgivable. Others, 3 years, 5 years, 10 years, could be on there forever. So what happens is most of them are 0% interest rates, but if you get $5,000, $10,000, $15,000, how long is it going to take that to be forgiven? Because what happens if it's not forgiven is you're stuck in that house. You cannot sell or refinance without having to pay off that grant during that duration of time. So let me explain that. If that down payment assistance program is a grant to you or a loan it goes out for 5 years or 10 years. If you refinance or sell your house within that duration of time, you have to pay it back. Most of them have 0 interest, but you have to pay it back. Okay. So you have to watch, some of them, again, like I said, you walk out of the closing and they're forgivable right there and then. Okay. So that's some caveats there. And you go through here. Is it a lien? Is it not a lien? Some require you to be a first-time homebuyers. Some don't care. So that's another area that we're looking at. Income. This is where a lot of people get disqualified. Okay, so there's called what the median income throughout the country. You can just Google it. What's the median income for Fannie Mae or Freddie Mac? That's what I would suggest you look up, and it'll tell you what that number is. Some of the programs is you can only be at 80% of the median income. So let's say the median income for your area is 60,000. So if you make more than 40 grand, you don't qualify. Some will go to 100%. Some will go to 125. Some will go to 140. Some don't care. You can make $1 million and still qualify for the program. So those are the things we're going to focus in on. The other area is what kind of property type is it? You can't really do it on an investment property because those require 10, 15, 20% down. You can do it on a primary home, but can you do it if you're buying a 2-unit building, a 3-unit building, a 4-unit building? Those are all the areas that we need you to call us so we can kind of take all your data and then go out and find that program that fits for you. Okay, so those are basically the highlights of the down payment assistance. Now here's offsets. I always like to do this, and I always ask people, why, what, where, what's the alternatives and so forth. So let's look at some alternatives that you can do. All right, so let's focus in on that. So some of the areas you can focus in on there is, and it's really not in today's world, but a lot of times in the past we would say, okay, why don't we do this? Why don't we ask your seller to contribute maybe $3-4 grand? How do we do that? Okay, this is going to sound really odd, but it worked for years and it still works. You're trying to buy a house and it's let's say $300,000. You really don't have that much money. A lot of houses are valued, here, let me get to the point. We go to the seller and we say, you know what, Mr. Seller, Mrs. Seller, seller, we'll give you $310,000 for your house. Give us a credit back at closing for $10,000. So on their side of the ledger, they're still netting their $300,000 that they wanted. We're then getting a $10,000 seller credit back from them that can help you in a lot of areas. Another area that we can do it on our side of the equation, we can say, okay, well, you qualify for a 4% rate. Wonder if I gave you 4.25% and gave you $4,000 back as a lender credit. That's another way to do it. Okay, so there's a lot of areas that skin the cat. You might have a 401k that you kind of forgot about, and you're like, you can use that money a lot of times when you're looking to buy a house. Ask mom and dad maybe if you can borrow money from them, or they'll gift you some money to put down on the house. Those are all ideas on how to come up with your down payment. What we like to do is take all of your information and then say, okay, here's the 1 or 2 or 5 that you qualify for. Here it is. Here's your alternatives. And then what we do is we come back and say, here's what I would do. And truly, it is what I would do. Okay, so that's kind of breaking down the down payment assistance program generically for you. But the best way is to ask questions and then also email me. My email is dan@therateupdate.com. So I'd highly suggest you email me. I apologize. I get probably 300 to 400 emails a day. If I miss your email, please email me again. I know that sounds bad, or call in, ask for me. Okay. I'm here all the time. I let you guys know when I'm in Florida. When I'm not here, usually rates go bad, but I'm here all the time. So please ask for me if you want me specifically, and we'll kind of go from there. So let's start answering some questions. I apologize. I'm old. I got to get my glasses on. So let's see this. And I'm not scanning these and reviewing them or whatever. I'm doing this live. So please watch your comments. I don't want to kick you out of here if you start posting some really bad stuff, but let's get to this. What happens to housing if we enter a war? That's freaking awesome that you asked that. What happens in wartime? So I actually just pulled up this because it was concerning me this morning. Let's go to this. I'm going to click it to that. What happens in wartime? If you've been following me, often you hear me say flee to safety. Okay. This was what happened back in, let me see if I can get the whole screen up there for you. This is what happened in, back when we invaded, my apologies. When we invaded, Hussein, and it goes down here. It says, if the government has increased spending and borrowing to finance the war, Some economists believe that that will crowd out other borrowers and force interest rates up. Okay. Although this may not be a universally held view, Green says is that's what's usually happened. Most of the air is out of the U.S. Treasury market. Whitaker says you can pick up additional rates and returns by investing in mortgage-backed securities. Okay, so what are we saying? What's kind of being said there? It's saying if we go into war, what's going to happen is how bad it is, the initial reactions, all war is bad. I get it. But and the duration of time. Okay, so what the initial reaction you saw on Friday was the stock market crashed. And then you saw, as I just posted here, what happened to the MBS market. I'm going to show you that right here. It rallied up 55. That is huge move. Okay, so that's what happens behind the scenes on that. Why? Well, it's because basically people flee to safety, meaning they sell their stocks, and then they have to put their money somewhere. Where are they going to put it? They're going to put it mostly in bonds. Well, sometimes they look at it, they're saying, okay, treasuries yields are here, mortgage-backed securities are here, corporate bonds are here. Where am I going to invest that money? And people were pumping into mortgage-backed securities last week. So that's what I expect. But what we do, if we were talking with you on Friday, there's a lot of people that I called back and said, hey, I thought the rate was going to be 3.75 and I got you actually 3.625. Why? We watch the market. I know what's going on, kind of a little crystal ball behind the scene, because I watch the MBS market all the time and I have for years. I can see patterns. If you watch my video Tuesday or Friday morning, we crashed about 70 points or 80 points on the MBS on Thursday. And I said, we're going to be up at least 20 to 25 on Friday. Logged in on Friday and we were up 25. Okay. And then we ended up the day up 55. So a lot of times what happens is there's knee-jerk reactions in the markets, and they'll oversell or overbuy. That's where an expert like us, just think if we got you an eighth off of your rate over the life of the loan, you know how much money you're going to save? Okay. So again, we're a broker. I can shop you over to 150 different lenders. Let us help you with that. So thanks, Dave, for that comment. I'm going to go up through and start going from the top. You guys are starting to load in the questions. So thank you so much for that. The 140 median income requirement, is that your gross or net? Great question. It's your gross. So again, the best way to do that is just Google it. And I'll try, when I'm all said and done, I'll try to put a lot of these URLs down below in the details section of the video once it does post and go live, so you guys don't have to search it. You can click, 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 click. I'll put the Fannie Mae and Freddie Mac sites there just so you can go and see in your area, what is the median income. And again, if you go in there and you doubled it and you still need a down payment assistance, call us. We might be able to get you into a program that has no limits. Okay, so that's where we can come into very much value for you guys. All right, so thanks, Beast, for that one. Do you do 40-year mortgages? Yes, we do. Those are usually, in almost, I wouldn't say 99.999, I think in all cases, those are a non-QM loan that you could qualify for. But yes, there's interest only, non-QMs, 40 years and so forth. No, guys, you're going to say, okay, you guys are getting back to those dumb, programs as you usually did. They're not negative AM. They're not teaser rates. They're actually a solid rate. It might even be a fixed rate that you have interest only options for maybe 3, 4, 5, 10 years. Then it usually re-amortizes and then has a payment for the duration of time after that. So great question on that one. Hey, Frio, is a good time to buy land, house now, or wait to see if the foreclosures will arrive? You know what? That's actually a really good question. But let me rephrase it this way, or let me put out my views here. A lot of people say when I'm talking about a lot of this stuff, they're like, okay, you're basically saying that there's going to be a crash. I want you guys to know, I am 100% sure. Well, I don't know what tomorrow's going to bring. I don't even know if I'll wake up, God willing. But what's going on right now should not crash the market. Why? And I'm going to beat this till it's a dead horse. Supply demand. A lot of people get ticked off of me. They're like, dude, you don't have a clue. I might have more of a clue than you think I do. Everything is predetermined or determined by supply demand. prices went out the roof. Why? And I explained that last week, and I explained it in several videos. There wasn't enough housing data or houses on the market. You hit it on the road, and I'm glad you brought this up, is foreclosures. They're starting to come back. I posted something last night where foreclosures are starting to really hit and hit hard, okay? I said that. I said, wait till about March. And I've been saying this since last year at this time. I said, wait till between January, February, and March of 2022, you're going to start having foreclosures come in the market. Now, I don't like foreclosures because everybody loses. If you're, I'm not trying to be insensitive there, but it's part of the cycle of all of this. Okay, I had an analogy, and I don't want to say it, but you have to have that adds supply to the markets. Without also the forbearance of moratorium pulled out, and with forbearances pulled out, you're going to see foreclosures rise and rise and rise. But it's not going to get to the point where we were in 2006, 8, 10, where there was so much housing and nobody even wanted to touch it, and there was no lenders really lending. You couldn't even buy it if you wanted to. So I don't see a crash coming. So what would you wait for? Would you wait for the values? Again, they're not going to crash, to continue to rise a little bit. What's happening in the rates as well? The long-term trend, rise a little bit. So all you're doing is postponing the inevitable. Will you get a better deal? Probably not. But as more supply comes in, there might be more choices to choose. So great question. I greatly appreciate that. Stephen, 2.25 locked in December. How the tables have turned. Dude, you're telling me. And that's what I've been saying. I'm like, guys, rates are going to go up. And then people are, oh, you're a fear monger and you're this and you're that. Just watch. And if I'm wrong, I'm the first one to come out and say, dude, I completely botched that one. But I'll explain to you, what I try to explain to you is my thoughts. Why am I saying what I'm saying? And then I back it up with as much data as I can. If you can prove me wrong on something, please do so. I don't take offense to it. I'll revamp my studies and what I do on the back end, and then I'll come back and give you I might tuck my tail between my legs and say, guys, I completely botched that one. Here's how I was looking at it, but here's the facts. So I only want facts on the channel. I don't want to just say, well, rates are going to go up. Why? Well, housing's going to go up. Why? Okay, ask why. Okay, so that's what, but thanks for Stephen for posting that video. I think you posted another. Interest rates will go up even higher and higher with war involved. Yep. All right, Brandon, got a 2 point. God bless you, dude. I got 2 point. I refinanced my mortgage last year. You know how you're the handyman guy and your house is always the one that needs all the work. I finally refinanced last year and I timed it pretty darn good. I got 2.625 on a 30-year fix with basically no cost. Then you're going to say, well, Dan, you're the lender. Well, yeah, but it's still out there available to people. Stephen, I'm going to have to skip you, but thanks for all the comments, buddy. 30-year fixed will be 7% by the end of the year, in my opinion. Brandon, I would love feedback with you. Down in the bottom below, or email me or whatever. What I'd like to do is, why do you think 7? Okay, you might be right. I'm predicting 4.5. We could teeter on the 5% range. If we hit 7, I think it's going to be a huge hiccup. But the reason is, why would we hit 7? That's mainly the area that I'd like to discuss with you. Or I'm trying to get in and out of here in an hour because I know it's Saturdays and you guys, have things to do, and I greatly appreciate you guys watching me as you do. But I would love to have some correspondence with you. If you could email me at dan@therateupdate.com. Let me know why you think it's going to go to 7. I'd be intrigued to find out your thoughts on that part. Over here, DPA can be such a life changer for first-time homebuyers. My wife and I were extremely lucky in that we were able to get a Bank of America DPA plus closing costs grants, closed and moved in 2 weeks ago. Dude, why didn't you call me? Or Joey, we have them. Okay, so if you guys are watching the channel, please at least give me a shot. That's all I'm asking. If it come back and it said Bank of America, their program smoked mine, God bless you. I'd be the first one to say, you know what, take it. All I'm asking you guys to do is, I'm trying to educate you and guys give all the transparency in the world, but please at least give me an option on some of this stuff. But good for you, man. I greatly appreciate it. But that might be a comment. If you can post down below, what kind of terms did you get? Was it the rate? Was it higher than norm? How much did they charge you in fees and points and so forth? Because I really like to dissect and see if it was worth it. Okay. So that's that. Let's go to RCG. So sorry, guys. I'm trying to read without my glasses on to put them off and on and on and off. I can read pretty good. So I apologize when I stumble around. We live in Arizona and buying a house in Gilbert for $850, closing mid June. How much is minimum down? After down, can we lock in up to $640 on the second loan for the remaining lock rate for the commitment? Can we lock rate up to $475 and take second loan for remaining lock rate? I don't understand that, but let me go through what your thoughts are. How much minimum do we need down? Well, it depends. It looks like you're going to be in a jumbo. So let me explain this. Some areas of the country have high balance loans. So let me go through this, and I promise you I'll answer this question. There's conventional loans. Those usually go, I'm just going to make these numbers up to make it just make sense for you guys. Let's say the loan limit is $600,000. Okay, you can go to my website and Google it. What's the conventional loan limits? And it'll give you the numbers. I think it's 647, 200 or something like that. Let's say it's 600. Okay, when you go above that, you need a jumbo mortgage, unless you're in what's called a high valued area. So a lot of parts of Texas, Arizona, California, New York, you have what's called high balance mortgages, where you can get the same program and guidelines as the conventional, but you can go up to a higher loan amount. Okay. So in this case, I don't know where you are specifically, but you might qualify for the high balance loans. Those usually have a little bit higher of a rate. So if you can fit into that program, you could probably get away with, and I'm going to go out there on the ledge, I'm confident to say you could get away with 5% down. Okay. You're probably in a high loan limit area. Unless you are not in that area, then you'd be in a jumbo. You're looking at a jumbo between 5 and 10% based on non-QM and other jumbo programs. So this would be one I would like to talk to you about, to really dissect it and break it down. What I didn't understand is, and take second loan for remaining lock rate for the conventional. I think I get what you're saying. No, most of the time jumbo loans, the way I read this now is you're getting a jumbo loan. Now, can you get a conventional loan second to make up the difference to basically do 100% financing? No, those are gone. That's why a lot of times I say now, loan programs, you have to have skin in the game. And very rarely, other than USDA and VA, can you get 100% financing. Okay, so thanks for the question. And after I read it a few times, I get what you're thinking. So thank you so much there. Joey, and we lock back in. Truly amazing. Yep, you're bragging on me, buddy. You're bragging on me, but I appreciate it. Carlos, let's see what Carlos has to say. I'm trying to refinance. I got shut down like 2 months ago due to debt ratio was out of whack because I didn't work in 2020 and half 2021. Can you help me? I might be able to help you. A lot of lenders, a lot of loan officers don't understand. I even talk to people in this industry, and they come to me and say, that person didn't work on their job for 2 years, don't qualify. It really isn't etched in stone. Here's an area that's really unique, I'll say, is if you just graduated college and you got an offer letter, you can get a job based on that income, okay? In your case, what I would need to know, and this is one of those ones, call in or email me, where are you working now? Are you at the same place? Were you off on furlough? Was it because of the corona? Why were you off? Did you stay in the same field? Was it part-time, and is it part-time? There's a lot of questions there that I need answers to. And that's why a lot of times is, call us. And we're not trying to hard sell you. You're buying the last person was buying an, $850,000 home. Do you really want to go through the internet and just click, find the best rate in town, click, upload your stuff and hope to God they figure this thing out for you? I don't. And if you're one of those people, we have that platform. We will be calling you because it makes it so much easier. We need to know, what are you looking to do? Okay. And there's a lot of things in the background. One of the questions somebody asked was, do you use net or gross? Great question. Some people don't know the difference. I'm not teasing you. Some people just don't know. Okay, so there's a lot of pieces of the puzzle. It's like when we talked about interest rates. What makes up an interest rate? You just can't just call in and say, hey, what's today's 30-year fixed rate? Because there's a ton of components under there that we need to know to be able to give you a valid quote back. So thanks so much, Carlos, for that question. And again, please call in and just ask for me. Call in Monday. I'd love to talk to you. Okay. So Gia, I have an option to sign a contract on a new construction today that will close in July in Nashville. Would you purchase or wait it out? I'd purchase. Here's what I would ask you. It's a new construction. So I'm assuming you're using a builder. With the supply chain, I'll go out there on a limb and probably say, you might not be done in July. Okay. But if you are, we have rate locks up to 6 months. Okay. Is it good to do or not? We'll maybe talk about that a little bit later in the video because I'm talking about down payment assistance right now. But here's what I would ask you to do. And I posted a video the other day. See if they're going to give you a credit. A lot of them will give you, the builders will give you 5, 6, 8, 10,000 in credits. But the caveat is you have to use their lender. See if you can get that wording changed. Just to say financing. You can get financing anywhere. Get financing with us if you would. We'll lock you into 6 months. The lender the builder can call us anytime they want. If you give us the authority to talk to them, we'll give them updates weekly if they want it. Don't let them say, well, we want to make sure that you're really, really approved. That's BS. Okay. So ask them, say, can I get that 10,000 credit and use any lender I want? When they say no, ask why. And when they come back and say, well, we want to make sure it's a valid approval, are they basically saying my documentation's fraud? What I'm issuing you is invalid. I mean, it's kind of that's a bad answer. I'll say that. But why would you wait? Rates are only going to go up and values are only going to go up. So that's my analogy there. But Gia, thank you so much for that post. Let's go to Brandon. Working with a builder for our loan, $15K in incentives. They want $5K to lock for 90 days as we would be building, as we are building suggestions. So you're still going to net 10,000. And again, I apologize when I read these builder things because it really, excuse my friend, pisses me off. Because why are they forcing you to a lender other than maybe there's something in it for somebody? Okay, that's all I'm going to say. I'm not accusing anybody. I'm not on the record of saying there's fraud. I'm just saying when they do that, basically what that is called is steering. Google it. I can't steer you to an appraiser buddy of mine who can then charge you whatever they want. Okay, that's steering. We can't make you use that service and give you an incentive for that. Okay, so 4.125, that's a good rate. If you're still netting 10, that's a good rate, but it still burns my butt if you have to use up 5,000 of that money basically to give to the lender who might be giving it back to the builder. Same. Okay, so but Brandon, thanks for that. But if you're still netting the 10 grand, I would take it because you can call in us and we can give you a quote. But I'm pretty sure that on a 90-day lock, I got them. We probably couldn't give you a 4.125 and still 10,000 in lender credits, because that would push the numbers way up there. But thanks. But I greatly appreciate your comments. So thank you so much for the post. Raymond, do you guys do loans in Oregon? Yes, we do. We just got the license accepted. So here's what's going on throughout the whole country. We're working on getting licensed in every state. Some take longer than the others. We are not going to New York. New York is a mess. I don't mean as a state, on the regulations and the licensing and everything else. There's not a lot of lenders that lend in New York. So if you find a lender there, or if you're a lender there or a broker that can deal there, please reach out to me because we get a lot of applicants looking to buy in New York that I can't help. But Oregon, yes, sir. You can go to the website. You can apply there, click the schedule meeting button, or give us a call on Monday. We'd love to help you. We really would. So thanks for being on the channel, and thanks for asking questions, buddy. Do you guys also have long-term rate lock options for VA loans? That's a good question. I don't know. And I have no problem saying I don't know. Okay. I'm not a proponent of guessing, because guessing, I'm a 50-50 chance of being wrong. And if I'm wrong, I'm going to put you in a really bad situation. So please email me this comment to dan@therateupdate.com. I promise you I'll look that up and I'll get back with you. Just once you email me, give me an hour to look it up and I'll get right back with you. But if we do, I'd love to help you there. So thank you so much for the post. Boylet. I'll say Boylet. I'm sorry if I missed that. Do you offer loans in Florida? I'm trying to get you betcha. That is our Florida, Texas, Arizona, and California are our biggest markets. I'm in Chicago. No, it doesn't look like I'm in Chicago, but I'm in Chicago. We do very little business in Chicago. Chicago's a tough market. Taxes are high. It's tough. But yes, we do that. I would have, if you probably aren't a longtime follower of my channel, why I say that, I posted within the last 60 days that second home rates are going to get skyrocketed. FHFA, they can basically oversee all of conventional financing and so forth. They came out and had a rate bump, loan level price adjustments, which we went over last week. They did a loan level price adjustment on second homes and they popped the rates. So expect, if we quote you back, don't fall off your chair. The rate's probably going to be about 1% higher than the normal going rate for a standard home right now. But there might be other options for you for that second home. So those are areas we'd like to talk to you and say, are you really looking to do this? Are you looking to do that? Where can we help you and maybe help you put more money down or something like that to buy that second home? But thank you so much for the post. But keep watching, because these are areas, if that loan level price adjustment goes away soon, these are where we keep you on the forefront to say, hey, you might buy this thing and then 6 months later that adjustment goes away. We might call you to refinance and say, hey, we can get you a 1% lower rate because that adjustment went away. So thanks for the post. Brandon, you're back. Fed will push rates to 7% because of the need to slow inflation. Yeah, I hope you're wrong. I'll put it that way. But again, the Fed moves the federal funds rate. The federal funds rate is interbank lending. Like if a bank needs funds overnight to meet their reserves, they interbank lend, and the federal funds rate is that rate that they charge each other's banks for those reserve requirements. David Santana, is that what they're charging you, and would it go toward your closing costs? Is that what they're charging you? I don't know what that question is. I'll keep trying to go through. Marcus, thanks, buddy, for the thumbs up. Do you offer in Atlanta? You betcha we do. I was getting to the licensing thing. We're working on licensing. So if your question's about if we're licensed there, please reach out to us. Even if I can't do the loan, on my team, I can find another team to help you, and we can oversee that for you to make sure everything goes timely and smoothly through that system. Okay. So thanks for the post there. Carlos, what's your email and phone number? Currently in the same field and same company, just was out due to Corona shutdown. I'm in California, but work in Alaska. Just go to the website. The website is therateupdate.com. And everything is there. And you can even find me if you're with the same company, you can find me in the email log system that we have internally in the G drive. You understand what I mean by the G drive. Let's go to Paul. Paul, hi Dan. Are you thinking variable or fixed right now for $150,000 mortgage? Great question. Okay, so here's my thought. Here's what I would do. I'm not willing to take a risk of an adjustable rate. However, let me give you the backdrop of this. Okay. If I did an adjustable rate, I would make sure it's at least 7 to 10 years. Okay. Why? Almost all loans refinance, sell, change, modify something in the 7-year range. Why that is, I don't know, but it's history back to day one, basically. Okay. So if I'm looking for an adjustable rate, I'm looking at a 7 or 10 year. When would I do that? Well, there has to be a good enough spread for me in the difference in the rate. So would I take a rate? And that's why I'm glad you asked this question, because for months and months and years, I've been saying, why in the world would you take an adjustable rate at this point when in most cases it was the same or higher than a fixed? Okay, so now that it's lower, what's my thinking behind that? Well, I want at least a big enough reward for doing this. And here's what I mean by that. Would I take an adjustable rate at the same rate? No. Why would I risk it? If in case I kept my loan for 11 years, my rate's going to change. Where are rates going to be in 11 years? I don't know. So I don't want to take that chance. Okay. But if that spread gets big enough, and my trigger point is about 0.5%, when that spread gets about 50 basis points, I then will be willing to take that risk to do the adjustable rate. One of the programs, or one of the main programs we have for adjustable rates, is what happens after that duration of time. There's a lot of caveats in the adjustable rates now that protect you as the consumer versus where they were years ago. Okay, there's caps on everything. One of the biggest features, or the coolest features of these today, is a lot of times what they'll do is after you hit that ARM rate piece, let's say it's 10 years, after 10 years, what will happen is your rate will adjust. It'll adjust every 6 months, but there's caps. And also what happens is the remaining balance of your loan will get recasted over a 20-year term and re-amortized. So you probably won't see a major increase in your payment as you possibly could, because that payment could jump $200, $300, $400, $500. But because of the recast and all the other sets or all the other triggers built in, you might only see a very modest change in your payment. So great question, and I hope I answered that fully for you. Dave, do you service Utah? I'm pretty sure, but email me, please, dan@therateupdate.com. I'll check and see if our licensing has gone through. So what we're doing on the back end is we're working diligently to get licensed in all the states other than New York because of the regulations, and we're applying daily. Some of them will come back and they'll give me a temporary authority to do loans immediately. Some are like, okay, it's going to take us a week or two. And then some are taken, we've applied for some of the licensing in December and we're still waiting. So please reach out to us and let me know. And then I can get back with you and say, okay, yes, we are. Or again, if I can't, I might be able to negotiate with another team, not negotiate, or refer you to another team within our company that can help you. Okay, so that's a great question. So again, if you have a state-specific question, if I'm licensed there, please email me and I'll get right back with you. I promise. It might be me or Pat Frio. We'll get right back with you, letting you know if we're licensed in that state. He handles all my licensing issues, and he also works with clients. Let's see. Hey, Dan, I'm buying this year in Atlanta. Hope you offer. We do. So please reach out to us. I'm actually trying to track down Sir, and I emailed him, and I apologize. Sir Harrison, he's a realtor in Atlanta. Dude, reach out to me. I love your channel. I got your phone call. I emailed you. We're just playing disconnect. So if you're out there, I'd like to, hook up with you to maybe do a video or two. If you're a realtor out there, here's what we're trying to put together right now. I'm trying to put a mapping system together throughout the whole country. So when we do get clients through YouTube and all the social media platforms, we can then use the YouTube family to help this whole process. So let's say, for example, you're in Atlanta and you need to buy a house. We can get you pre-approved, and then we can hook you up with a realtor we're associated with in that area. So we're putting together a database right now to do all of this and more. So please email me if you're a realtor. My email is going to blow up this weekend at dan@therateupdate.com. Let me know where you are and all of your contact information. We will be looking you up. We will be making sure that you're valid, you're solid, no complaints, and I'll probably call you to do a brief interview to make sure we're on the same page, because you're reflecting, my values as well when we hand you a client, and I don't want that to be jeopardized. Okay, so thank you so much for that post. And then we're going to go to Paul. Hey, man, thanks. You know what? I'm always a proponent of saying thank you to everybody, and I even thank my wife for cooking me dinner. And I always got used to that, just saying thank you, because so many people their first thing is to bitch or complain, but very rarely anybody ever says, you know what, you did a good job. So I always try my best to say always thank you, or hey, you did a good job, or I appreciate it, versus I can yell at somebody. but I'm also on the other side of the equation is, every once in a while, tell somebody thank you today. And you'd be surprised. They might be like, hey, thanks. So just saying. What's your Instagram? I have an Instagram. Everything posts there, like some of my newsletters and stuff like that. But if you go to my website, therateupdate.com, go to that on the bottom left. Those are all of our social media platforms. Guys, I'm 56 years old. I misquoted. My kids yelled at me last week. I said I was 55. I'm 56 years old. A lot of this technology I don't really get. I like Twitter. I put everything on tweets. If you ever tweeted me, I don't reply because I'm not on Twitter, but I'm just trying to get the information out there for you guys. So thank you so much for asking. All right, looking at new construction in Maryland coming soon. Probably won't be ready for 9 months out. Is that too risky because I can't lock now and rates are skyrocketing? We can lock you for 6 months. So here's my thought behind this. So let me give you guys. This is one of the areas where I wanted to talk about extended locks. And we're 50 minutes into this. I only wanted to go an hour. So let's go down through this. And I greatly appreciate everybody posting. Let's go over to switch little categories now and go into, if you're building, what do you need to do? So I apologize. If you have down payment assistance questions, please email me your questions, okay? I'll even try to go back every night. If you check around 10 o'clock, I'm replying to everybody on YouTube the best I can. It's hard to follow the threads, but if you post something on there, don't be surprised that I am truly doing those comments. I'm sitting at home in my recliner with my iPad, and I'm going through and answering every question out there. So here's my thought on if you're building, okay? We have an extended lock. I'll give you the pros and cons. I'm transparent as all get out. Okay, we can lock you up to 6 months. In your case, I don't have a 9 month. We are heavily seeking 9 month or 1 year locks. Okay, but the problem there is usually when you get above the 6 month lock, they give you what you would be giving is the current rate plus 1%. Okay, here's what we offer you. And there's a whole bunch of pluses to this, and there's some minuses. The rate that we can lock you up to 6 months is this. It's normally the current rate plus 0.5%. Okay, and you might say that doesn't do me any good. But hold on a second. Let me go through the whole detail and explain this to you. So we lock you in. What is that doing for you? Well, it's getting the burden of rates going skyrocketing off of your shoulder. Okay, so yes, it is a little bit higher, but think, guys, you're looking 6 months out. We don't know what's going to happen in 6 months. Okay. So let me go. So the con is the rate is 0.5% higher than what it is today. The pros is there's no fee for it. There's no application fee. If rates drop substantially, I'll just say drop. I can do one of several different things. One, I can give you a free float down before you're closing to the current rates. Okay, pretty simple. Or two, and I don't like doing this, but it is an option. If rates are substantially different or another lender out there, and I mean another lender, if there's a lender out there that's having promotionals or specials or something, and I'll explain that to you in a second, I might actually pull your loan from the current lender we're with and take you to that lender. Now, we try not to do that because I'm also graded on our pull-through ratios and our closing ratios with different companies, so I don't really like doing that. But again, I work for you, okay? I want what's best for you. So I joined the largest brokerage in the country. Why? Well, my business is big enough, but I want to help more and more and more people. So we're set up with, I know, over 130 different lenders. So the benefit to you guys for me is we lock you in. Yeah, the rate's 0.5% higher. I'm being transparent. I'm not saying it's lower or whatever else. And again, if rates go up, you're protected. If rates stay stagnant, okay, you paid the 0.5%, but you locked in. If rates go down, I can float you down for free. You're basically a win-win-win-win-win. So why would you not? We do require that you send in all your information so we can make sure we get you approved. We'd be more than happy to correspond with your lender to say, yes, we'll give you a full approval. We verified your assets. We verified your income. We got your credit. Now, the caveat behind all this, just because we approve you today, does that mean you still qualify a year from now, 6 months from now? Well, with what's going on with rates today, a lot of people are not going to be able to qualify with their current lender because the builders lenders are not allowing them to lock for more than 30 days. That's a huge red flag. But I talked to a couple of people Friday and said, but please don't go out and buy furniture, a new car, boat, get credit cards, run up this, miss payments, because your credit can change from now to 6 months from now. So don't think, oh, I got approved. Now I can go do whatever the heck I want to, change jobs and all this other stuff. You can't, because right before 60 days, 30 days before your closing, we're going to revalidate your job, your income, and your assets and repull your credit. Everybody's going to do that. Okay. So please be careful when you get an extended lock that you don't pigeonhole yourself into that area. So let's get to, I'm going to try to get to one or two more questions, and then we're going to cut it at this the 60-minute mark. So let's go down and see if there's anybody. Paul, thanks for answering the questions. Great weekend. Thanks, man. I'll have a great weekend. Enjoy the Super Bowl. How many days can we lock on a jumbo? I can usually lock on jumbos 60 to 90 days. So if you're looking for a jumbo, reach out. I might be able to get an extended lock for you on those, but I don't know. Right now, the lenders are far and few between who lock you in over 90 days, and we're adding lenders, honestly, as we speak to be able to offer that product to you guys, especially in this rate environment. There wasn't a need for the last 5 years, 10 years, because rates didn't really move. Now rates are up 1% from where we were a month ago, so people are freaking out. I get it. All right. Thanks, Dan. You're a godsend. Thank you so much. I got my start in all of this on Christian radio, doing radio shows and stuff like that. So thanks for that. I am waiting for the builder to announce the price. Okay, got it. Building financing 9 months later, 4.625. This seems pretty high. Excellent credit. What do you think? Again, the 9-month lock is going to take today's rate and add at least 0.5% to it. So. But again, I'm gonna scold you a little bit. How much is it costing you? What's the fees? So many people get just bamboozled on, hey, I got this rate, and then we find out you just spent $20,000 to get that. Are you nuts? Okay, so thank you for that. Can I buy down points? You can. But I don't have a 9-month lock. But on us, yes, you're more than welcome to buy down the rates. I usually do a math analysis behind that to see, does it make sense? What's your break even? If you're buying a house and you're like, here, let me go down this path for a second. So many people are thinking, okay, why do I? If the housing market crashes next year, I'm out. So many people look short-term anymore. So if you're looking short-term, here's what would drive me crazy. I don't want an adjustable rate mortgage, even if the rate's 0.5% lower, because I don't like the adjustable rate feature. But I'm really concerned that this house is going to drop in value next year. Well, it's kind of contradicting each other. Here, let me explain. If it's a long-term buy, it's like stocks. If I bought a stock today and it dropped tomorrow, and it's a long-term buy that I plan on holding until I retire, do I care? Over time, it's going to go like this. Okay. So many people they don't want the short-term lock thing, even if it's 10 years, because I don't want to risk that. But then they're inundated with, well, I wonder if the housing drops next year, but then what's it going to do the year after, and then the year after, and the year after, year after. So if you're thinking long-term, think long-term everywhere. If they're thinking short-term, think short-term everywhere. I hope that makes sense to you guys. I'm going to post this. Hey, Dana, it's my daughter. Can you still look for something better for me? Will my lender allow me to switch to what you have? Okay, this is a question a lot of people have. I'm locked in somewhere. Can I switch to you? Yeah. They can't hold you, they can't hold you hostage to that rate. I mean, let's say, for example, they're offering you a 4.5% rate with $5,000 in fees, and I can get you $399 with no fees. You'd be goofy not to do it. They can't come back and penalize you. Okay, so please don't be like, hey, I already talked to this place and I'm pigeonholed in. You're not. Until you sign on that dotted line. You can shop around up till, I would say, up till about 30 days prior to your closing, because then it gets to be crunch time. So thank you for that question. And then how does Russia's situation affect rates? I'm going to answer that in that 1%. Okay, so how does the thing affect it? Here's what's driving me crazy. Mainstream, I've been talking about this for about a month or so now. When I heard that Russia was on the brink of, invading Ukraine, nobody in the media was talking about it. It was driving me nuts because I'm like, you guys realize the implications of this? So what's going on with the Russia duration thing is this, and I addressed this at the beginning. Russia's probably going to invade Ukraine. I don't know what's going to happen, but the initial reaction we basically saw on Friday, okay, the stock market dropped big. It dropped actually most of the week, but Friday it dropped big because of the fear of that. Then the other piece of this equation is this, and I'm going to show you this right here. It's the MBS market, okay? You can see the number up here. It was up 55 basis points when they came out and said that it's pretty much imminent that Russia is going to invade. Okay, so what happens here is, and I'll repeat myself, and then we're going to end the show. If Russia invades, the initial reaction is the stock market's going to drop, and it could drop big. And when I say big, I'll reference it this way. It could drop 5%, okay? It could maybe drop 10%, but we've already had a pretty substantial correction. People take that money, and you're talking billions and billions and billions and billions, that these investors or these investment groups or hedge funds or whatever, they're not going to sit on cash, okay? They want some kind of return. So they flee to safety or buy quality. So what do they buy? And I just posted a post back from when we were ready to invade Iraq. People flee to safety. So they buy bonds. They'll buy treasuries. They'll buy corporate. And then they'll look at MBSs, the mortgage-backed securities market, and they'll figure out where the risk reward is the best for them. And the way treasuries rallied the other day and mortgage-backed securities rallied the other day, it looks like they're buying both. Okay, that's a good sign. Also, and I'm going to leave it at this, this might give the Federal Reserve a time to kind of unload some of this stuff, mortgage-backed securities and so forth. And I'm not a QT person, quantitative tightening, but it might give them some leeway here to do some, maybe they can do the 50 basis point adjustments to the federal fund rate and not really have a huge hiccup in the markets because of people are flowing their monies out of stocks into bonds right now. So this might be a good time for the Fed to do this without a major repercussion through the markets. So that is it for today, guys. We hit our 1 hour and 2 minute mark. I love the participation. I'll continue to do these as long as I have participation. Next week, I have a wedding to attend, so I might have to post this earlier. And I should have my home studio done by that time. So please watch over the week to see when I will be doing next week's live event. And I hope you attend. So if I can be of any help to you guys, please, all I ask you to do is reach out to me. And how do you do that? Well, you go to therateupdate.com. The easiest way to reach out to us is right here. You can give us a call, 844-775-5626, or right here, you click it and it'll actually go in. You can schedule a meeting. It'll open up our calendar, or you can start the application right now. So that is it for today, guys. Thank you. I can't thank you enough for watching. God bless. Stay safe. And I hope we don't go to war because everybody loses in war. So I'll see you guys Monday. Take care. Bye-bye.